The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem. Joining us now to discuss the crypto markets is Octavio Marenzi, CEO and founder of capital markets consultancy, Opimas. Welcome to the show, Octavio. Thanks for joining us. So, as we mentioned, President Joe Biden, as well as Fed Chair Jerome Powell, Secretary of the Treasury, Janet Yellen, they're having a meeting today, hopefully to fix inflation. What are your initial thoughts? What do you expect, and what's your reaction to Biden's op-ed on trying to fix inflation?
Well, I'd absolutely love to be a fly on the wall in that meeting and listen to what the three of them have to say to each other. It'd be really fascinating to hear. I mean, I read Joe Biden's op-ed in terms of what his program was to fight inflation. He pointed out number one was to allow the Fed to do its own thing and that he didn't want to get involved in. So the most important plank of his inflation fighting platform is to allow the Fed basically free rein. And other than that, here's sort of grab bag of other things, some releases from the Strategic Petroleum Reserve, 1 million barrels a day, things of that sort. But that only really is going to impact some prices and probably in a fairly modest way. I think between the lines, Joe Biden is sort of setting the groundwork for some sort of price controls to take place. That's what I expect him to do, probably a couple of months out from the midterm elections. I mean, things are looking pretty bleak there for the Democrats, and he's going to have to do something fairly spectacular to turn that around. And I think some sort of price controls is going to be the answer there. He's talking about price gouging. He's talking about firms having exorbitant prices and stuff like that. He's going to have to act on those since he's identified those as problems. But in terms of the Fed, yes, the Fed is sort of seems to be tepidly committed to increasing interest rates. I think the past 6 months, as we all know, has been pretty bleak for Bitcoin and other cryptocurrencies. And what really the Fed is now doing, has said is, we're going to raise interest rates with the Fed funds rates another 50 basis points at the next meeting, the meeting after that. But after that, we think we have some flexibility. And that, I think, has given the crypto markets and Bitcoin some breathing room right now to basically say, well, okay, maybe they're going to go back to printing more money more rapidly again. And the equities markets have responded fairly favorably to that as well. So I think that's helping crypto in the very, very short term now. But I think you're likely to be disappointed by that in the long term.
Octavio, when I read President Biden's op-ed, it seemed to hearken back to a certain president from the 1970s who tried price controls, and it didn't quite work out so well. Would these kind of measures actually spook the markets into saying, oh God, we're headed for the third Nixon administration, where you had price controls and runaway inflation, et cetera? Wouldn't this actually create a long-term panic in the market by having such action?
I agree with you absolutely, and I assume the certain president from the 1970s we're talking about is Richard Nixon. Now, I think absolutely from an economic perspective, these things don't work, right? We remember, we pay attention to Economics 101, we know what price controls do in terms of creating shortages and things of that sort, and you create black markets and grey markets and things of that sort very, very quickly. So I think we're all aware that they don't work. But Nixon back then also did say solutions are not the answer. And by that, he sort of meant that, yes, that's going to give me an economic solution potentially, but I need a political one. And the price controls worked beautifully for Nixon from a political perspective, in the sense that he went on to win an absolute landslide the following election. So he beat McGovern handily on the back of those price controls. But I think it's a question of demonstrating to the... Sorry.
I mean, to be sure, he won against McGovern for a whole bunch of other reasons. It wasn't just because of his tackling of inflation. McGovern wasn't exactly the most centrist of candidates, and he also had a split in the South. So I'm wondering if perhaps President Biden might have gotten the wrong lesson from all of this. He had started his political career around that time and ended up in the Senate as a young man, and he's kind of learned all the wrong things, apparently, on how to deal with inflation after, however many years of watching Volcker, and he was on the opposition side of the Reagan administration in those years when inflation was finally tamed, that he's now trying to relive the past using old tools that just didn't prove themselves to work. Isn't that going to scare everyone in the market?
I agree that we will certainly scare the market, but I think the question for Joe Biden is how does he achieve electoral success? And those aren't necessarily the same. I think you can implement some policies that might scare the markets and are not popular on Wall Street, are not popular amongst investors, but do work in terms of getting you back and re-elected, or at least having some sort of electoral success then in the midterms. But I agree with you, all the points you raise. I think, yes, he's learned all the wrong lessons. Reading the editorial, it does sound very yesteryear in terms of the approach. He doesn't seem to really fully understand the role of monetary policy and inflation and how those two things tie together. So I absolutely agree with you. He's learned the wrong lessons and he's going to probably do the wrong things. Now, when I said that I think he's going to implement price controls, I didn't mean to say that that's the right thing to do and that's good and I support that. No, quite far from that. But I think it might show... it was going to show its cracks very, very quickly. Within a few months after they're implemented, people start to realize, well, that didn't work. But people have short memories. And I think the general public might say, look, Biden's really understanding that and he's doing something aggressive about it and it's going to work. By the time it fails, maybe the elections have passed and he will have got the windfall from those elections, from the price controls that he would want to get for the elections.
So the reason why this all matters for crypto, one of the reasons is because we have seen such a strong correlation between the crypto markets and the stock market recently. And actually, over the past few days, we saw some signs that there might be some decoupling. But I guess I'd just be curious to hear your outlook. Do you think that the crypto market is going to continue to be so highly correlated with the equities market, or do you see them diverging anytime soon?
Well, I think they're going to remain to be very highly correlated because I think crypto has benefited enormously, as you point out, not directly from inflation, but it has benefited from very, very low interest rates. And so from monetary expansion and the central banks basically flooding the markets with money, a lot of the money has found its way into the crypto markets. So as they've tightened that again, crypto markets have done very badly, just as the equity markets have done as well. So I don't expect some sort of decoupling because it's the same underlying driver, which is the interest rate or monetary policy at the central bank. So I expect those correlations to remain into the future and not disappear at all. And you might argue Bitcoin is a more leveraged form of investment there.
Octavio, at the same time, right now, we're seeing the traditional markets, equities markets down in Europe, mixed results in Asia, and in the futures market in the US, it looks like they're down as well. But crypto is rising, it's all green. So I wonder, what's the reasoning behind that? What's your crypto markets outlook?
I mean, on a day-to-day and hour-to-hour basis, these markets can diverge quite a lot, but I think ultimately they're sort of going to fall back in line and be largely correlated with each other, at least without the underlying driver. So right now, today, I think what's probably happening in the crypto markets is people sort of reading the tea leaves and saying that the Fed at some stage in the not-too-distant future is likely to not continue increasing interest rates, and that's going to be very favorable for crypto. That's based on a few hours and a day worth of trading data, so I wouldn't place too much importance on that. I think the fundamental point is that the Fed might really turn around on interest rates in the not too distant future.
So you don't see a potential, for instance, now when you're talking about the Fed's opinion on interest rates, are you solely looking at the Fed funds rate, or do you think that potentially they might, let's say, not increase the Fed funds rate as rapidly as they may have been, but instead try to take care of it and try to deal with the interest rate issues and inflation issues through unwinding its balance sheet and kind of getting interest rates higher that way, while at the same time, sopping up some of the liquidity in the market, if you will, to curb inflation?
Absolutely. I mean, you're right to ask that question. There's many different ways that the Fed can influence interest rates. And one of the interest rates they try and influence the most actively is the overnight Fed funds rate. And that's usually the interest rate that they're talking about when they try and implement the monetary policy. So I'm just basing this on what they've said about what's going to happen next. So they had originally said we're going to have 50 basis points increases for as far as the eye can see, probably till the end of the year. And that is the direction and the path that they were going to go down. So expectations were we're going to be at 3.5 or 4% in terms of the overnight Fed funds rate by the end of the year. What they've said more recently is, well, yes, we're going to have 50 basis point increases for the next two meetings, but then we believe we have some wiggle room and some flexibility in terms of increasing interest rates further. And that's why the equity markets have basically taken off in recent weeks. And I think crypto markets have followed that more recently. that sort of slight upward trajectory, as the Fed is basically saying, well, those increases in the Fed fund rates that we talked about before are not really baked in now. The next two are, but after that, we'll wait and see. The other question is then, how do they impact how does they implement monetary policies to impact other interest rates? The other area they've really been influencing interest rates is through the mortgage market and buying large amounts of mortgage-backed securities and pushing basically interest rates on mortgages way down. Now, they've basically slowed that down. Now, they're no longer a net buyer. They're basically still out there in the market buying mortgages, but only to the extent to top up their portfolio and make sure it doesn't decline in value as people repay those mortgages. But very recently, they've actually started to buy a bit more aggressively again in the market. And so we've seen interest rates on 30-year mortgages actually go down the past 2 weeks. And that's a direct reflection of the Fed going out there and buying a bit more again. So you see that interest rate is also directly dependent on the Fed and their implementation of monetary policy. They're buying all the mortgages they can find.